Hello everybody, this is Matador from freetradingvideos.com. It's February 3rd, 2009. It's 12:35 Eastern Standard Time, and I wanted to do an update on what the markets are doing. So the stocks are actually rising. There's a little bit of a rebound in home sales. Again, just looking at Yahoo Finance over here, a really great place to go get some news. But Ford sales dropped 40%. Pending home sales post an increase of 6.3%. Merck and UPS both beat their fourth quarter profits forecasts, but Motorola and Dow and Chrysler and Ford all kind of got mangled. So mixed news, kind of a sideways choppy day, even though it's just up a little bit. So here's the S&P 500 on a 3-minute chart. Really interesting to see these resistance areas hold. Just pulled these off of the recent lows. You can see my resistances on the way back up, support on the way on the bottom. I could actually fine-tune this one a little bit at this point. There you go. So good resistance, nice gap fill in this area. We were watching that yesterday. Right on the 200 MA, kind of sold off after that, and then another hit and another on the gap up this morning, right into that resistance. So a lot of times gaps like this will fail, right? Will fade. All the people who got hurt up here, right, who went long at the wrong time after many bars up in a row, now get a chance to get their money back. They feel pretty good about that. They sell for a nice break even or less of a loss than they were experiencing. That sells off. Higher swing low, this is great. There's more of a gap fill, which means you have a better chance of making a lower swing high. But then we have a higher swing low and went right back up to resistance. So 1, 2, 3 tests of this area. Finally breaks. People don't often take a breakout into resistance like this, especially on the first one, but some people did try it, chopped around for a while. And if you look closer, when it finally failed out of that, one of the bigger bars on the chart broke there. I drew that line in just to clarify that, and that became resistance. That will also be resistance again in the future, so I can extrapolate this line out in the future like this. And so here's your resistance area, these 2 points. This will also be trouble, and that will be as well. So 2 resistance areas on the way back up. What I'll be looking for here after about a 61% retracement of this run-up, let me just check that. Yeah, a little bit more than a 61% retracement, almost a 76% retracement into the 100 MA. Have a better chance of making a lower swing high, and that also makes sense with the overhead resistance we have here. So be very careful about how you go long in this environment, at least with the stock pattern on the broad market. Let's look at the trend and see how it's shaping up today. Very nice. So big gap up in the morning, big gap down in the trend, and good volume now, except now it's about even. So all day long, even though the markets have been chopping around, trending a little bit higher, the trend has not been confirming that until just a little bit recently. We've been getting a drop off in the trend. So I'd like to see this down into the 0.8 area before I decided to go long. Has really good questions and comments and things about the trend. I'm going to try to do a video about that later. But good stuff. So that's the trend. The tick, basically just flat. Spent most of the day above and below the zero line, equal amounts. And the VIX has dropped off nicely with just a little bit of a run-up recently. So the last little pop here we got is not being confirmed by a drop in the trend, at least right now. So that, let me just grab the spatters, this little run-up here, not only is it running up into resistance off of a 76% retracement of this last run-up, it is not being confirmed by the VIX, at least in this time frame. I would need to see the VIX fall. I would need to see the trend fall, and then decide how I'm going to go long into either the broad market or a relative strength stock compared to the broad market. Pretty cool. So that's the way I look at the market internals, not just as a number themselves, because they can be skewed, especially by the inverse ETFs. Again, this is what we were talking about in the forum this morning, but as how they occur in context with other events happening in the markets. Excellent, you guys. Join us at freetradingvideos.com if you haven't already. Excellent place to go and look around and see other videos from other analysts, and also go into the forums. Probably one of the best forums I've ever seen, because we built it that way. So anyway, a little biased, of course, but hope you guys have a great rest of the trading day and week, and we'll be talking at you.